I'm Alex Letourneau for Kitco News. The week ended with disappointment last week with the Fed, ECB, and BOE. Gold started stronger this week. We're going to find out why with Jim Wyckoff and Technically Speaking coming up. Jim, thank you for joining me. How's it going?
Hello, Alex. Good to see you.
So, Jim, last week ended in disappointment. What do you see happening this week?
Well, last week we did see some disappointment from the marketplace, hoping to see some definitive quantitative easing measures implemented by both the U.S. Federal Reserve and the ECB, neither of which occurred. So we see more choppy sideways trading. We are in the summertime doldrums here in the U.S. We've got a lot of Europe on vacation, so I think you're going to see more sideways choppy trading. To start out this week, we haven't seen any fresh major fundamental news, and we're just seeing quiet type marketplace. I will say that last Friday's jobs report from the U.S. did put a bit more risk appetite into the marketplace in general, so that could augur on the bullish side for gold and silver here in the near term, especially the fact that the U.S. dollar index has weakened a bit from its highs. So that's a bullish underlying factor for the precious metals.
European leaders started off the morning with some comments. Is that going to drive the market in any particular direction?
You know, it's probably not going to. They're just more machinations coming out of the European Union, and I think you may go through the entire month of August just in this malaise until we get to September. We get Europeans back at work. We get the U.S. Traders more interested, getting back from vacations, getting their kids back in school. I think you're going to see the marketplace pick up. But until that happens, I think you're going to see some sideways and choppy price action. And let me give you the range that gold and silver are trading in from a technical perspective. For December gold, we've got some strong overhead resistance at the June high of 1646.40. We've got solid technical support at the July low of 1559.50, and therein lies your sideways and choppy trading range. The direction in which we break out of that trading range is probably going to be the next significant trending move in the gold market. Looking at the silver market, sideways and choppy. The bears do have the slight near-term technical advantage still in the silver market. For September silver, we've got solid resistance at the July high of 28.44.5. Solid technical support at the June low of 26.10.5.
All right, Jim, let's move on to your market rating for the week.
Okay, my Wyckoff market rating for gold presently is right at 5. That's dead neutral. The bulls and the bears are struggling for near-term technical control with neither gaining much of an advantage. And silver is rated about a 4, 4.5. Bears have the slight technical advantage there.
All right, Jim, that's perfect. Now, before leaving, why don't you leave us with some final thoughts for the week?
Well, I think you're just going to see more choppy and sideways trading unless we get some kind of major development coming out of the European Union or some other geopolitical development. I think you're just going to see more quiet summertime doldrums type activity.
Excellent, Jim. Thank you so much for joining me today.
You bet, Alex.
And that was Technically Speaking with Jim Wyckoff. I'd like to thank you for watching. If you have any comments you'd like to send in, please send them to newsfeedback@kitco.com. Daniela will be back tomorrow with For Pete's Sake. And I'm Alex Letourneau. Thanks for tuning in.